massive inflation is coming. The top 1% almost have more wealth than the middle class. And inflation is all about Kool-Aid. Now, I know you may wonder, what does inflation have to do with Kool-Aid? Well, I'm going to explain it. Basically, the Fed, when they started printing money, they added sugar to the Kool-Aid. Now, let's look at this Kool-Aid container as a comparison or an example to the economy. The Fed poured sugar or money into the Kool-Aid container. As with anything, with gravity, all of the sugar went to the bottom of the container. And the Fed said, hey, well, where's the Kool-Aid doesn't taste like sugar? Well, we have to add more sugar. So they added additional money. They did a taste test. They put their spoon in. They were only tasting the top layer. They didn't have the sugar. And in turn, they thought that the container didn't have any sugar or that the economy didn't experience inflation. Trump, when he was elected at the beginning of his term, he actually worsened the problem. What did he do to hide inflation? He basically lowered taxes, and he lowered personal taxes, and he lowered business taxes. As a result, the economy, the container, experienced even more sugar. So we have to look at historical data to determine if this has happened before. So a key point that we have to consider is that the catalysts, or possibly the Democratic Party, if they're elected in 2020, they'll take this spoon, whatever, and they'll stir that container. Once they stir that container, massive sugar. Someone's going to have a diabetes after drinking all of this sugar. And the economy will have major inflation as let me just pull up some websites. And here's a website that I was referring to, the richest 1% of Americans close to surpassing wealth of the middle class. This is as of November 9, 2009. And they basically say the historical low interest rates, but addition, it's the richest are at the bottom of the container. So they're the recipient of all the sugar. They're the recipient of all the money. So we have to look and see, has this happened before? Let's look at historical data. So let's look at a period from 1942, the Dow, this is a Dow Jones. I took off the inflation. 1942, Dow was at 100. And it rose precipitously to, without any real decline. You see maybe, 200 to 180, maybe like a 20% decline there, 10%, maybe 15. So we went from 100, let's say, 1942 to 1965. This was about a 9 times your money situation with no real decrease. Major billionaires of today were recipients of this boom, such as, in particular, Warren Buffett. So you can see it started to plateau. So what was this plateau? You can see right now we're at a similar increase since 2009, right to now, almost a 4 times. So I can guarantee during this period, you had a huge disparity as well in between the 1% and the middle class and other classes. So it looks like this happened before and there was a plateau. This was the sugar being added. Now they started to stir it. So what policies stirred the sugar in the 1960s? So we can look. Let's see, because the Democrats would be a catalyst. So here we have it. This is the main, I have like a spam bot maybe. This is the main catalyst that will redistribute that sugar, or that will stir that sugar in that Kool-Aid container. The capital gains rate, the capital gains tax. I combine tax and rate. The capital gains tax, the rate will redistribute that wealth. And you can see right on cue when the Dow plateaued before, one of the catalysts, and this is probably the main, you can see the capital gains tax rate increase. This is the max. It went from about 25 to 40. So when the capital gains tax increases, in such a fashion, it dissuades investment from investors. So it makes real estate, it makes stocks not as attractive because instead of being taxed at 25% or lower, you're taxed at a 40% rate. And this is devastating. This is almost as close to 50%. So half of your gains will go to the government in conditions like this. And as you can see here, there was a plateau. Now, when did the plateau subside? Around 1980s went up. Now let's look at the capital gains tax rate then. So you can see right on cue, actually a little bit prior, late 1970s, the tax capital gains rate decreased. The max, and we're just looking at the max as a main representation because the big whales, the billionaires, the funds, they're going to be recipient of the max tax. So you can see that went from 40% to 20%. Now this creates an environment conducive to investing. And as you can see, likewise in the chart, stocks start to, in addition with technology and other developments, stocks start to increase, right? We'll go back, and these are dramatic shifts. I mean, we're talking about a 15%, 20% to 28%. That's not a dramatic, that's like the temperature. Is it 70 degrees or 76? It's almost the same thing. It's not a big dramatic, whereas a 40-degree temperature to a 70-degree, that's a big, now you're going to need a coat in one of those days of temperature of such. So you see the capital gains rate increased. Now you see late 90s, I think this was a Clinton Bush era. The rate decreased to about 15%. Oh, this is an outdated chart. I think it's still about 15% as of 2019. And what this did was it created a condition where the sugar that was added to the container, let's go back to that. I know you love this one. Oh, where'd it go? The sugar that was added to the container, it stayed at the bottom of the container. Now it's in process of being stirred or shifted. Do you believe me? Let's look at some of Elizabeth Warren's tax policies. So you can see here, she wants to add a real corporate profits tax. It will be equal to 7% of the corporation's profit. And this is at the top line. So it's going to be hard to avoid paying this 7%. And here you have capital gains. I think this is Bernie Sanders' policy, but we'll scroll to the top. You can see capital gains increase at the heart of Democrats' tax the rich plans. This is March 2019. And you have a situation now where the middle class and other classes, they're upset at the rich. I think Jeff Bezos had a net worth of over $100 billion. The rich are getting richer. Real estate prices are increasing. So you have a resentment amongst the other classes, and you have a condition, revolutionary conditions. This is the condition that starts revolution, but it won't go that far, I don't think. Maybe if Trump gets back in, but I think the Democrats have a real chance because Trump barely won the prior election. And you can see Gates, let's scroll back to the bottom, raising it 5 percentage points to 25. But I think it'll go even higher. But the Democrats know, just in this article, and you can research yourself, the Democrats' main point of contention for them is an increased capital gains tax plan that's going to stir the Kool-Aid. As a result, they're going to stir the Kool-Aid. That Kool-Aid is going to taste like nothing but sugar, meaning that inflation will be everywhere. Commodity prices will increase. So you may ask yourself, has this happened before? We can go right to the Dow. We did. Okay, we see increases there. But now let's look at the commodities. Let's look at the gold prices. We'll take off inflation. Environment where stocks and real estate aren't an attractive investment, and you have stirring of the Kool-Aid, which creates commodity booms. You have commodities, one of the main ones, gold starts to increase because, for one, the middle class has more money, so they're able to spend more money on frivolous purchases. And for two, the rich, the middle class that are investors, upper income class as well, they have nowhere to spend their money. Now keep in mind, gold, it went from 35 to 850, I think was the high one day. You can't see it was only one day. I think that was like 1981 or 1980. But gold is quote unquote supposed to be taxed. Now, if you go to your local dealer, you buy gold for, let's say right now it's about $1,500 an ounce, and a month later, if that gold goes to $2,000 an ounce, you'll receive $2,000 cash, and it's up to you. The onus is on you to file those taxes, to report those taxes, as opposed to stocks, where the stocks actually generate an actual report. I think it's a 1099 that has all of the gains and losses on there, and that report is generated annually, so the IRS can better track and identify unaccounted for capital gains tax. As compared to gold and silver, the onus is on you, and there's no true way to effectively track capital gains, especially for, let's say, less than a few million or a few $1,000,000. You get to the billions, I mean, it's hard enough to buy that gold, so you may have to pay some. But the capital gains tax increase creates an alternative for tax-free, quote-unquote, tax-free investments. Keep in mind, you're supposed to pay your taxes. It's up to you if you do. But that's where the money would go. And we're looking, in my belief, we're looking at a environment or conditions similar to, now I think I showed you 3 different times, we're looking at environment from 1970 to 1980, and you can see in that rate or in that period, you can even start 1960, late 60s. You're looking at an increase in capital gains, which will cause an increase in the consumption of commodities, gas, oil, silver, for the medium investor, or the middle income. Sorry about that. And that in turn is going to stir the pots or become a catalyst for, where are we? For gold. Where's the gold window? Oh, here we are. For gold. So you're looking at a condition or environment where you can expect a skyrocketing gold price. And also you can see here's another diagram as well. You can see actually when the capital gains tax started to increase, you got an adjustment in a real medium family income. It went up, and that's because they were the recipients of those capital gains increases. They were the recipient of the policies, maybe education, maybe, let's say Elizabeth Warren wants to get rid of tuition or student loans, and all the Democrats, or most of them, they're looking at policies, or they want to implement policies where they tax rich and give that money to the middle income, middle class, or lower classes. So what do you think? Do you think the Democrats are going to win? Do you think that the capital gains tax will initially increase? And if it does, will you pull out your money now, or will you wait until the capital gains tax is in play and then pull out your money? And that's when you start to see a decrease or a stagnation in the stock market. So leave your comments below, subscribe, and let me know what you think. Thanks for watching. To subscribe for more financial content, please click the circular button where the red arrow is located, and also watch one of the top 2 videos up top.